So Union Budget 2023 is the last full budget of the second term of the Narendra Modi government. There's a lot of expectations from the rural and agriculture sector from the budget, given that a lot of supporters and vociferous supporters of this government stay in the rural areas. Let's see what this budget contains for them.
Union Budget 2023 will be the last full budget of the second term of the Narendra Modi government. As a result, a lot is expected for the agriculture and rural sector given the sizable chunk of voters who reside in the countryside and who have been the key electorate for the ruling dispensation. In the past year, the centre has spent liberally on schemes for rural and agriculture sectors, irrespective of the fact whether it has been an election year or not. A tight fiscal position in the last 2 or 3 years, first due to the COVID-19 pandemic and then because of the Russian invasion of Ukraine, has made things challenging for the government. A tight fiscal situation and elections also mean that any big reforms would have to wait for another day. The centre would first like to consolidate existing programs to ensure their timely completion. This may be dovetailed with more populist ideas before undertaking any new or bolder measures.
We saw the introduction of PM Kisan scheme under the Ministry of Agriculture and Farmer Welfare. And this is one of the largest cash disbursal schemes in the world in terms of the number of people it touches, which is close to 11 crore. Now, today, this scheme accounts for around half of the expenditure of Ministry of Agriculture and Farmers Welfare. So one could see a continuation and focus on these short-term measures, especially given the pre-election year context.
Also, the spike in global and domestic prices due to the Russia-Ukraine war and its cascading impact on fertilizers will continue to pose a big challenge for the government while allocating funds for the rural and agriculture sector. Despite signs of a cool down in the commodity price complex across the board, it will continue to exert pressure given the global economy's uncertainties.
Prices for commodity like gas, phosphoric acid, sulfuric acid, a lot of which gets used in the fertilizer segment. And when one looks at the budgetary allocation for agriculture, one also needs to look at the Department of Fertilizer and Chemicals. Like, for example, if you look at the allocation for the fertilizer subsidy, that stood at around 67,000 crore in fiscal 18. And as per the budgeted estimate for fiscal 23, that stands at 2.15 lakh crore. So that's over a threefold jump in just 5 years. So that, this just underlines the sort of challenge the government has been facing on account of the rise in commodity prices. And that sort of, puts pressure on them to allocate money to various other aspects that they would want to spend money on. But the good news is that we're seeing a decline in energy prices now. Crude oil has been trending lower than $80 per barrel for the last few days. We're also seeing expectation and some correction in gas prices in the coming future. And that should sort of alleviate the stress on the fertilizer budget.
One area of concern in this financial year and even earlier has been the very slow rate of economic growth in the rural areas. This has been manifested in various data points like your two-wheeler sales have not picked up, your real rural wage growth hasn't been very robust, demand for Manrega work has remained very strong despite a visible uptick in economic growth elsewhere.
The budget might look for measures to address this growing dichotomy between the two. A recent report by Business Standard showed that real rural wage growth has virtually stagnated or has been negative in the first 6 months of FY23. The growth in nominal terms has been steady, but the sharp rise in inflation has eaten into the increase. The wage growth in rural areas, which showed signs of uptick immediately after the first nationwide COVID-19 lockdown was lifted, has returned to its old pattern of nominal increases or even degrowth in some months. This is also manifested in continuing demand for Manrega work in rural areas. Demand for Manrega work in FY23 has been less than the peaks of FY21 and FY22, but is still higher than pre-COVID years of FY19 and FY20. During the pre-pandemic era, around 50 to 55 million households used to seek work regularly under the scheme every year. Since the pandemic struck, this number has jumped to over 70 million per annum. Moreover, in terms of budgetary provisions, before the pandemic, around 70 to 80,000 crore used to be spent annually on the scheme, which since the pandemic has jumped to almost 100,000 crores per year. One way to address the growing stagnation in the rural economy is to increase spending on building rural infrastructure like roads, houses, sanitation and water supply projects. Given that these have a high recall value and good optics going into an election, this might be the way that the government will take in Union Budget 2023.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.